How close are the United States and China to reaching a trade deal? We'll discuss the latest moves. Also, what's in the future for the nuclear talks between the United States and the Democratic People's Republic of Korea? Hello, I'm Anand Naidu, and this is The Heat. China and the United States have a little over a month to come to a trade agreement, or the US is set to raise tariffs on $200 billion worth of Chinese goods from 10 to 25%, and that's just for starters. According to Western media, China has offered to import more American products in order to erase the trade deficit by 2024. The Wall Street Journal also reported that the United States is considering lifting tariffs on Chinese goods to facilitate a deal before the March 1st deadline. Next week, a Chinese delegation led by the Vice Premier Liu He is due in Washington for another round of high-level talks. Well, to discuss all of this, let's meet our panel here in the studio. Paolo Von Schirach is the president of the Global Policy Institute. Morgan Muchnick is a Republican strategist and co-founder of the M2 Group. From Beijing, Qinduo Xu is a senior fellow at the Pangoal institution. And also here with us is Saruhan Hatipoglu. He's the CEO of Business Environment Risk Intelligence and CGTN's Global Economics Analyst. Welcome to all of you to the show. Qinduo Xu, let's start in Beijing, and let's start with those trade talks between China and the United States. Nothing official yet from China, but what we are hearing, the reports we are hearing, is that China will go on what's been described as a buying spree to get this trade imbalance down to zero. It's very ambitious, down to zero by 2024. There's also talk here, as I just mentioned in Washington, that the US may get rid of some of the tariffs that it's been talking about. What are you hearing there in Beijing?
Well, I think for Beijing, there's no problem in the first place to help reduce the trade gap, so-called trade imbalance, let's say, the deficit on the US side. It's really a matter of time, a matter of agreement. So China is importing more and more goods from either the United States or Brazil, for example, for soybean. So it's really a choice. China can purchase a lot more products from the US side. There's back in last year in May, before the temporary agreement between the two sides, which was, of course, basically sabotaged by Washington. So there's even a lot of publication speaking highly of the US-made products with high quality, top quality. Basically, the Chinese society and the government were ready at the time to purchase more product from the US, but unfortunately that failed. So the sentiment remains the same. China will import a lot more from many other countries, including the US. So the $1 trillion spending spree on the US or on other countries is a matter of choice. There's no problem for China.
So, and as I said, this is very ambitious, getting that $323 billion deficit down to zero by 2024. That's only 5 years away. We've also had the growth numbers come out for China in 2018, 6.6%. What do you make of that number? And has this trade dispute actually been hurting China?
Well, absolutely, yes, on the second question. And the GDP growth rate was expected by a lot of analysts that it would actually be a pretty bad number. And we're seeing the impact of it. It's not only the trade issues, it's also the Chinese policy of cutting down on leverage on the economy that we're seeing. Having said all that, though, if only this game were about numbers, I think it would have been resolved by this commitment that the Chinese government is making, but it is not. It is about industrial policy. It's about China 2025. So when the teams have met last week in Beijing, they did talk about a lot of things, but more than 50% of the conversation was about numbers. The standing issues, the forced technology transfer, intellectual property protection, as well as state subsidies to Chinese state-owned corporations are where these two sides are very, very apart. There's a big gap there, and I don't see that being overcome, especially until March 1, where the negotiations are supposed to end.
So, and another big question, and that is China may want to buy more goods from the United States, but can US companies meet that demand?
Well, that's another thing. If the overall demand is declining with the global economy taking a downturn here, the answer is no. So it's not that easy. Also, there's also the actual demand issue. Look, there's the South Korea-US trade agreement that we've seen not too time ago. And the Korean side said, hey, we're increasing the quotas for your autos. We can sell more here. But if you look at the numbers, the U.S. companies, car companies, could not even meet that original quota. So from 25, it went to 50,000, but the total imports was about 12, 13,000. So demand matters here, and these numbers are not easy to get rid of in 5 years' time.
And if I could just briefly say that, though, in terms of the United States producers meeting this demand or this sort of new numbers, this sort of buying spree, I think they absolutely can. I think one of the big problems is that it's been very hard for American companies to sell into China as aggressively as they like to because of these rules about having joint ventures and all these things. If the Chinese government would allow for an easier, more seamless pathway for producers to sell into the Chinese market, I think there's going to be a lot of companies that can step up to the plate, if you will, and meet that demand. And companies will emerge, and new companies will start to come in and do that if they open up the pathway.
Yeah, Morgan, there has been some talk that China might start looking at other goods from the United States, energy, for instance, start buying oil from the United States, start buying more agricultural produce from the United States, giving up its markets in France, in Australia, and redress the imbalance that way.
Yeah, I think it sounds great. I mean, as an American, I think it's great that this is happening. I'm surprisingly optimistic, a little more optimistic than I think my guest here, because from a lot of Americans who have been pretty tough on China for a long time from the economic policy issues, we've been just wanting to see some goodwill. It's even just making it clear that there's a movement towards understanding our frustrations, meaning folks that are looking at it from the American point of view.
Yeah.
I actually think this is a very nice opening.
Well, there is a lot of goodwill here. But, you know, if we look at this, Paolo, from the U.S. side, U.S. companies are also feeling the pain of this dispute.
Yes, indeed, they have, because obviously Americans are importing, in some cases, intermediate goods from China that end up in American-made products. If these products get to be more expensive, that hurts their bottom line and and reduces their margins. So there is some friction here. But you know, I agree with the sort of the broader issue here is kind of twofold. Mr. Trump, at the very beginning of this dispute, focused almost entirely on the issue of the trade deficit.
Right.
So, well, the trade deficit is an indication that something is really wrong here, and we got to redress this. And we hear now from the Chinese side, they say, oh, we're going to buy more stuff, etc. But then in parallel, as it's been indicated already, there is the issue of the rules of the game, that the perception, at least, whether it's completely true or not is a different matter, is that we are not playing by the same rules, that Chinese companies have a reasonably, open access to the U.S. market, but it's not the same for American companies. And so here it gets more complicated, because a question is, do the Chinese, according to the Americans, operate following the best practices of international trade that apply to everybody, or do they indeed, as many Americans claim, and indeed the U.S. administration also claims, discriminate against importers, or rather exporters from the U.S. or other countries? So these two things are being addressed, it seems to me, contextually in the course of these negotiations. Buying more stuff from the U.S., it's not terribly complicated, even though I am not quite sure how quickly can we redress $300 billion in imbalance. What are we going to sell them? I'm not quite sure that the Chinese really want to buy, echoing what you were saying about South Korea. I'm not sure that there are really that many things that appeal to the Chinese that we can offer immediately.
If you open up the spigots and let American ingenuity and business figure out something to sell them, I guarantee you we will. I can give absolute confidence.
But Paolo, how much domestic pressure is President Trump under now, politically, to get a deal? Because there was a survey put out by the Federal Reserve, and that was last October, which said that this is hurting American companies.
It is. Certainly, if one looks at sentiment, I mean, I was reading something today about what are investors doing in the United States. They're moving into cash, okay? Right. Well, that usually is a sign of, what's going on here? Let's not be too daring and too ambitious in terms of new investments and great plans for expansion and whatnot. Therefore, I think, yes, there is a concern, and certainly if we look at what the IMF data, what Christine Lagarde had just said in Davos, world economy down in terms of global growth, in part due to the uncertainties caused by this major, trade dispute, which involves the two largest economies in the world.
Okay.
So is there concern in the United States?
Right.
Absolutely.
Okay.
I do agree with that, because there's also something that every Democrat and Republican is looking forward to, is the election that's coming in a year or two.
Right.
China doesn't have that problem. And China can win the waiting game as far as the situation is concerned. Right now, the leverage, I guess, in terms of negotiations has moved down to China's side, because if the stock market follows another downward trend, the way we experienced in the last quarter, I think that's going to be pretty bad for President Trump.
So the onus is on President Trump. I mean, if he gets a deal, he can take that to the country, couldn't he, before the election?
He can, and I think he will, because he's playing the numbers game too. We have not seen him complain about security issues at all.
Right. I want to get the view from Beijing. And Qinduo, we can see that the United States is playing hardball. If we look at what happened last year, Canada arrested a senior officer of the company Huawei at the request of the United States. The claim was that this company had violated sanctions against Iran. And this is how the Chinese Foreign Ministry responded to that. Let's watch this.
We urge the United States to pay close attention to China's position, take action to correct its mistake, and to cancel the arrest order for the Chinese citizen. China will, of course, react to U.S. actions.
So, Qinduo, how is this being seen in China?
Well, obviously, this actually has two levels of issue. On one hand, for the Chinese side, people see it as a bit unfair. Let's say, finally, for the Chinese, they see there's a champion company which is able to compete in the international scene, even in Western developed countries, their markets. But for so-called potential security challenge or security reasons, Huawei was banned out of the market in the U.S. and the Five Eyes countries of the U.S. allies. People see that as unfair. And secondly, as we talked about the trade issue, trade talks between the two countries, there are something that's larger than trade, going beyond trade. That's the relationship between China and the United States, which has frayed, let's say, because of the change of strategy from the U.S. side toward China. Increasingly, people see China as a challenge, as a security threat to the United States in terms of its dominance or its position as the only superpower in the world. Yeah. So there's a larger issue than trade. That's also creates a lot of uncertainty for the business community in both countries and in the world, worldwide business communities.
Well, as Qinduo says, Saruhan, there's concern around the world. There was, we go back to the World Economic Forum taking place in Davos right now. The president of the Atlantic Council, Fred Kempers, who's at that forum, he told a panel that in 25 years of attending this forum in Switzerland, he's never seen such concern over United States-China trade issues.
Well, yes, I think I agree with that. There's a bit of exaggeration, though, because we're actually going in the right direction here. I think the two sides have realized what kind of an impact this could have on their respective economies, and we're seeing positive development. As long as each side should take measures and not to allow the perfect solution to stand in place of a good one, we will succeed.
Okay, we are going to take a break right now. We would like to thank Saruhan Hatipoglu for joining us in our conversation. We'll be back right after that break to talk about the second summit between United States President Trump and North Korea's leader Kim Jong-un. That's scheduled to take place next month in Vietnam. Stay with us. We'll be back in a moment.